Warren Buffett is known as one of the best investors of all time, and he's amassed a multi-billion-dollar fortune investing through his company Berkshire Hathaway. But he's not only a great investor, he's also a great wit, and Buffett enjoys sharing his folksy wisdom with fellow investors. His advice runs the gamut of topics, not only about investing, but about life in general. But today, let's stick to Buffett's advice that could help make you rich. Here's the surprising thing. Buffett's wisdom seems so common sense and practical, and yet it can lead to great wealth. Here are 5 of Buffett's more widely known aphorisms and what they mean for investors. 1. Rule number 1 is never lose money. Rule number 2 is never forget rule number 1. Buffett's point sounds simple here, but it's disarmingly complex. Of course, an investor, you're trying to profit in the market, but one of the best ways to do that is by avoiding loss. When you eliminate decisions that expose your portfolio to loss, what's left is more likely to be a gain. And when you have more money in your portfolio, you can compound your gains even faster. This approach has implications for how you invest. Buffett's quote suggests that instead of looking for the highest upside, you should be looking to avoid loss first and only then look at gains. That's a different mindset from investors who view the stock market as a slot machine. 2. Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Here, Buffett suggests that when you see an opportunity, you need to act quickly and decisively. When the odds are stacked in your favor, such as when stock prices are down significantly, you need to invest heavily because good prices might not come along again soon. Buffett often takes this approach when markets are down significantly. He amasses a ton of cash during the good times and then invests aggressively when stock plunges. Having a lot of safe cash on hand allows him to use this strategy. 3. We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. While some investors think investing is a lot about the numbers, Buffett suggests that investing has much to do with the behavior of investors themselves. When investors are greedy and push the prices of stocks to the sky, Buffett becomes fearful because a market plunge may soon follow. In contrast, when investors run away from the market or a specific stock, Buffett becomes more interested because prices are cheaper. When stocks are cheaper, they don't have the same risks as when they're expensive, and this is how Buffett thinks about avoiding losses. 4. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. While some value investors focus on buying only the cheapest companies, Buffett suggests a better course of action is to buy wonderful companies, those with better economics and competitive positions. Part of the difficulty here is that whereas fair companies may go on sale relatively frequently, the great companies rarely look cheap. But a company with a good competitive advantage will likely continue to make money over time, and it can bail you out if you purchase at a too high price. That may not be the case for a fair company, which may falter and never return to your purchase price or beyond it. 5. The most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Here again, Buffett touches on the value of temperament for a successful investor, rather than intelligence. Rather than trying to go with or against the crowd, investors should analyze what's going on in the market, regardless of who likes what stock. By focusing on the objective facts, investors can make decisions that are relatively free of emotion and make better choices. While Warren Buffett may be one of the most successful investors ever, his investment approach can be shared by many investors, even if they don't want to spend a lot of time in the market. Focus on implementing Buffett's principles, and you too could become wealthy or increase your net worth substantially. That was all from us today. For more personal finance tips and tricks, make sure to subscribe to Breaking Broke.